Risk sentiment has bounced back strongly at the start of this year. The low-yielding funding currencies of the Japanese yen, Swiss franc and Swedish krona have all underperformed recently. The ongoing dovish shift at major central banks is providing encouragement for global investors. At the same time, there have been important breakthroughs in US-China trade talks and Brexit negotiations, which have helped to ease downside risks to global growth. Firstly, President Trump has announced he has delayed raising tariffs on China indefinitely. It follows what he describes as substantial progress in trade talks. Mr. Trump now hopes to set up a meeting with President Xi to finalise a trade deal. That could take place as soon as later this month. It is the strongest signal yet that global trade tensions are set to ease this year. A decision to also reverse last year's tariff hikes would be an unexpected bonus. The recent easing of global trade tensions is creating a more favourable environment for high beta emerging market and commodity currencies at the expense of the US dollar. Secondly, the risk of a disruptive no-deal Brexit at the end of March has now effectively been taken off the table. Prime Minister May has granted MPs a vote to extend Article 50 on the 14th of March, if she can't pass her deal by the 12th of March. The EU has indicated as well that they are open to granting an Article 50 extension. Recent developments could even work in Mrs May's favour as she attempts to pass her amended Brexit deal. Rebel Conservatives and the DUP have already softened their opposition. If EU concessions on the Irish border prove sufficient to pass her deal, it could provide an additional boost for the pound. Overall, the recent paring back of downside risks to global growth is a welcome development. However, it remains concerning that the incoming activity data, especially from the major economies, continues to weaken. It still suggests to us that the recent improvement in risk sentiment is built on shaky foundations.